Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, August 25th. The major U.S. indices started out higher this morning but then turned a little lower after the S&P 500 hit resistance near its 50-day simple moving average. So far, most sectors are trading in the green except the technology space, which is exhibiting relative weakness as mega-cap names like Facebook and Alphabet underperform. And on that note, let's go to three charts that could give us some insight into the week to come. First of all, as we normally do, we're going to look at a chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the tracking stock that follows our S&P 500 benchmark index. When I captured this chart today, the SPY was trading at $244.71. As you may remember, it made an all-time closing high back here on August 7th of $247.87. Since then, it's kind of rolled over here, pulled back down to its 50-day moving average, the green line, below its 20-day, the red line, rallied back up, but a lukewarm rally up, couldn't come back to the prior highs, then dropped in a big red day down to below the 50-day moving average, stopped at about 242, rallied back up, and now, unless we move back up higher again, back up toward and under and above, I should say, the 20-day moving average, then we could see more weakness in the week to come. Now, as I mentioned a few minutes ago, when the SPY here bumped into the 50-day moving average, the market did start a little lower here. Now you can probably barely see it, but it is trading at about even right atop this 50-day moving average, which is coming in at $244.76. We do have key price support, potential support at where this trend line is coming in, this blue trend line under the 50-day moving average at about 243 or 2430 on the S&P 500 itself. Then we have more potential support here at $242 or about 2420 on the S&P 500 itself. Then we can work our way down here to $240, 238. Right down here. So there's all kinds of potential support here if the S&P decides to roll over a little bit more. Now, of course, it could. Could it rally right back up into September and move back up to prior highs and maybe even above them? Sure. September is known as a volatile month. The last 2 weeks of August, which we're going through now, or the last week of August, is usually known also as kind of a slow time because a lot of people, a lot of institutional traders are still on vacation. You see the low volume down here. Our RSI is neutral here, and our MACD is trying to perk up here, but again, it's not back up over this zero line. So we're kind of in a slow doldrums area here for the last week of August. So we could see if the SPY moves down below this trend line and moves below 242, we could then see it move back on down to maybe even $240 or $2,400 on the S&P 500 itself. So we want to be kind of cautious here. We want to be kind of careful. Again, August and September are known, last couple of weeks of August and September are known as volatile months. So I like to keep a little cash around now so that I have some dry powder to take advantage of the opportunities that usually come as we approach October. Our next chart today is a chart of the PowerShares QQQ, symbol QQQ. As you all know, this is the exchange-traded fund that closely follows our NASDAQ 100 index. Now, the Qs made an all-time closing high on July 26th back here, right here. See this little tiny spinning candle here, if you see, or a little spinning top that we see here. That was the all-time closing high at $144.87. The important day was the day after. This was an outside day or a top reversal day that you see this big red candle here when QQQ price gapped way up above all the highs and then closed below, engulfing quite a bit, at least 3 days of the prior trading days. It did move all the way down quite a bit lower, but then it bounced up to before the close, as it normally does. But since then, as you see, the Qs have getting kind of tuckered out here, trying to move back up, but again having big red distribution days. That's days that open on their highs and close on their lows, on high volume, long days. Lots of sellers in these candles here. Lots of sellers. Then the Qs rally back up over the 50-day moving average. And right now, as I captured this chart, the Qs are trading at $142.12, trying desperately to stay above the green line, the 50-day moving average, which is coming at $141.66. So the Qs really, to remain healthy, they do need to stay, or it, I should say, needs to stay above the 50-day moving average. This 50-day line is very important to institutional traders, and so it's important to us too. Should the Qs fall below that 50-day moving average in the coming week, they could head on down to 140, right just below where the trend line is I drew. If they fall below this trend line, I suspect they could head on down to 138, possibly even down here toward 136. So it doesn't mean they're going to fall hard or in a fast move. That probably won't happen. And hey, what could happen is the Qs bounce here and head back up to prior highs. We won't know until this line is either penetrated or used as support one way or the other in the coming week. But it's something we definitely want to keep an eye on. Our final chart today is a chart of the SPDR S&P Metals and Mining Exchange Traded Fund is the symbol for the S&P Metals and Mining ETF. Now, as you can see here, the top components are Cleveland Cliffs, Alcoa Aluminum, Allegheny Technologies, Freeport-McMoRan, and U.S. Steel. As you can see, the XME was at a prior high way back here in February at $35.21. Then it gave up here and it fell. The XME fell pretty hard. Fell down here to lows actually down in June to $27.93, right in here. So that was a pretty big fall. Then it started rallying from these lows and finally got back over the 20 and 50-day moving average, then moved and penetrated above the 200-day, back up to the highs you see back here in June or July at about $32.75. It's pulled back from there, but found recent support at about $29.75. Now, we've seen a lot of these components rally since then, like Freeport-McMoRan, like Alcoa Aluminum, rally up off their 50-day moving average and move back up above the 200-day moving average. When I captured this chart today, the XME was trading at $31.36. I expect, since it's been up for 5 days in a row, it may pull back a little here in the coming week. But as long as it stays above the 50-day moving average, which is coming in here at $30.38, as long as it stays above that line, I may add to my position or start a new position here of the XME, again, as long as it stays positive above the 50-day moving average. Again, that's coming in at $30.38. So let's see how this acts in the coming week. I would welcome a little pullback to the 50-day here, down toward $30.50. And then a bounce up from that would be very, very nice. So it may be something you want to keep an eye on for the coming week. And now let's go on to this week's economic reports. But first, if you ever feel confused about how to approach new trades, if you don't know where to get in and where to take profits or use a protective stop, Check out our recorded online seminar, 3 Winning Setups. 3 Winning Setups will give you a playbook for successful trades, and this already low-priced webinar is on sale this week at a 20% discount. So don't miss out. For more information, go to the link on your screen. And now for this coming week's economic reports. On Monday, nothing much going on in that area. Tuesday, we have consumer confidence. Wednesday, we have the ADP employment change, the GDP, and our usual crude inventories. On Thursday, we have our usual jobless claims. Then we have PCE prices, the Chicago PMI, pending home sales, and our usual natural gas inventories. Not much going on Friday in the economic report-wise. Again, September is usually a volatile month in the market, which can provide profitable opportunities for traders. Check out our online seminar, 3 Winning Setups, so you can take advantage of those opportunities. It's already low priced and it's on sale just for this coming week. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.